It's often hard to predict and understand how super investors invest in Indian market. Hey investors, welcome back to another episode of vishalvealthview. In today's episode, we'll be taking a look at 8 investments made by two super investors, Mr. Ashish Dhawan and Mr. Dolly Khanna in India. We'll be ranking them on this chart. Don't take this video as an investment advice, rather take this for your learning purpose and try to understand how these super investors think. So without wasting much time, let's start this episode. So first company on our list is called Quest Corp Limited. Now Quest Corp Limited is a staffing agency or a staffing company that provides end-to-end staffing and hiring solutions for small and big companies. They also take care about short-term needs and long-term needs for hiring employees. Now this company right now operates in BFSI sector, banking, financial and information technology. And Mr. Dhawan is holding almost 190 crore of Quest Corp share. So let's take a look at the fundamentals and the growth trajectory of the company. Now, the company was able to grow at a CAGR of 12.3% in its revenue in its core segment year on year. Now, if you'll go and check the sales of the company's sales dropped from 19,000 crore to around 15,000 crore. And the reason is the company is planning a demerger into three entities because they want to streamline their operation, keep their employees focus on one specific task, one specific goal. And from a long term point of view, they are expected to grow at a CAGR of 11%. However, the interesting part is the expansion opportunity at which Quest Corp is looking at. They are collaborating and having a partnership with National Skill Development Corporation of India, and it's focusing on digital skill platforms and like making sure the youth is upskilled to the new digital skill and new digital age that's coming in into the society. And they will focus on talent development across high growth sectors like tech staffing and any other things. Now from a short term point of view, this company, since it's going to face demerger, this company is in correction phase after seeing a high back in September 2024. The company has seen a downturn, and I think this might be the reason why Mr. Dhawan wanted to build some position in this particular company. Now, if we see fundamentally right now, Quest Corp is costly compared to its peers. And it is costly in terms of the earnings they are able to provide, in terms of the margins they are able to provide. But they are trading on a high P ratio. And the reason is they have a dominant market position. They have a strong brand and a digital edge that their competitor does not have. And that demands a higher valuation and a higher rating at which a company is going to trade. Also, I think the P of 101 might not be exactly correct because this is a trailing 12-month P, and recently, because of the demerger, the profit dropped drastically. And this might not give you the exact picture of the business that this entity is operating right now. So, still, this company is a bit overvalued compared to its peer, but it's demanding that overvaluation or a fair valuation because it has an edge. So, how will we rank Quest Corp? So Mr. Dhawan invested in a solid business model at a time when the company was going through a demerger and a crisis. I think this is a solid S investment. He was able to pick the right time. He was able to invest in a company that is strong fundamentally and that will not face any kind of political pressure in the future. So this is a good investment in my opinion. Now, this next company is significant amount of Mr. Dhawan's portfolio. Mr. Dhawan right now owns 10% or to some extent 300 crore of Religare enterprise share. This company is a diversified financial service company. They have services like lending collections. Apart from that, they also offer stock broking and insurance services. Now, Mr. Dhawan is building positions in this stock since December 2024. So let's take a look at what are the fundamentals and growth prospects of this company. Now, if we see the historical performance, in last 1 year, the company was able to grow its revenue by almost 57%. And it was mainly because of multiple sectoral trend. The financial service was expanding. They were having consistent demand from housing finance loan. However, at this time, the company is not projecting a heavy growth or a huge growth. They are only projecting a moderate growth of about 15%. And the reason is they are also going through a restructuring right now. So we can see one common pattern in Mr. Dhawan's investment strategy. He only invests in company that's going through a turmoil and they are getting discounted by the market. Now, I believe because of restructuring, like it happened in HDFC Bank as well, it will be really hard for this company to have explosive growth in coming 2 to 3 years. But this is a good time when you can build position in this company. So let's take a look at what's the fundamental analysis of the company and what are the key risks associated with this company. Now, forget about the fundamentals. One of the major risks that I see is this company was associated to some kind of frauds, and now it's to some extent removed, but it's really hard to regain the investor confidence once it's lost. So I think I understand Mr. Dhawan's investment strategy. He goes after companies that are rejected by the market, that are good fundamentally, and that are selling at a discounted price. And he does not directly go after growth companies. He wants to get a discount at the market price, without which he's not going to invest in that. So Religare is a banking and financial service business, and it has some business model that are completely independent of lending. That's a good thing, but lending is one part where they have to rely on external cash and debt. So I would rank this investment as B because there were risk of frauds, and to some extent, Mr. Dhawan is able to either overlook them or handle them because he might have close connection with the folks running the show, but I'm not able to do that. So I'll rank this investment as a solid B. The next company on our list is called Prakash Pipes. Now, Miss Dolly Khanna right now owns almost 40 crores of this stock right now. This company is mainly operating in business of manufacturing pipes and delivering it to segments such as commercial and housing. So let's take a look at fundamental analysis and how we would rank this stock. Now, Prakash Pipe is a SME company as of now. It has a total market capitalization of less than 1000 crore and it's trading at a PE of 113. If we see there is a recent market correction in the stock price of this particular stock, the company does not have a huge amount of debt and it's trading at a healthy ROCE and ROE. I think this is a good investment from my point of view. The company maintains a healthy amount of cash flow, if we can see from a cash from operation, and they are continuously investing this cash flow to uh, purchase fixed assets so that they can focus on their capacity expansion. So in my opinion, this is a good investment. The promoter holding is not too low, but it's low. They don't have a majority stakeholder. That's a bad thing, but I think that's manageable. So how will we rank Prakash Pipes? An SME company with a growth prospect of more than 20% trading at a PE of 11 with high ROC. I think this investment deserve a S. The next company on our list is called Som Breweries. Now, Miss Dolly Khanna right now owns almost 78 crore worth of Som Breweries share. She added more positions in the last quarter. This company is mainly targeting premium to mid-tier liquor segments, and they have end-to-end liquor production and bottling facilities. So let's take a look at fundamental analysis and what's the sales projection like. Now, Som Brewery's main revenue stream is from domestic sales of IMFL, Indian made foreign liquor. Apart from that, they're also looking for some expansion projects. Recently, they announced a 600 crore greenfield project in Uttar Pradesh. They already have a presence in Bhopal and they are planning to open the Bhopal canning facilities in 2024. That will boost regional supply chain. Now, the company is looking to increase its top line by almost 18% CAGR in next 2 years because of its capacity expansion and brand marketing. Along with that, company is also looking for a market capitalization of almost 5,500 crore in next 2 years. And right now, the company is a 3,000 crore company. Now, I would consider Som Distilleries and Breweries a fairly valued company with respect to its peer for its current valuation. Let's take a look at what rank we would like to give this particular investment. Now, Som Breweries is a kind of business that some might call a sin business. However, the company is trading at a fair valuation of 31 right now, which is almost a PE 10 more than the Nifty's average PE. And the company is enjoying a growth of almost 50% in last 3 years, and they're looking for expanding their capacity. From that point of view, I think the Som Distilleries is a solid S from Ms. Dolly Khanna. I think this company can do really well in the future. Now, Mr. Dhawan is holding almost 288 crore worth of shares in this next company. It's called Equita Small Finance Bank. Now, this is a small finance bank that caters to corporate businesses and individuals that are not usually served by the traditional banking sector because they have higher risk profile. Because of these reasons, small finance bank have higher margins and they are able to charge higher interest rate to their customers. Let's take a look at what's the fundamental analysis of Equita Small Finance Bank and what's the sales projection. And let's try to rank this. Now, Equita Small Finance Bank is operating in three business segments. One is treasury, second is wholesale banking, and third is retail banking. Now, the retail banking segment has the highest risk of default whenever there is a catastrophe or whenever there is a hardship on the population. Now, if we take a look at the future growth projection in terms of revenue, they are planning to grow at a rate of 15% in next 3 to 5 years. If we talk about valuation, then as per Nifty GPT, this is slightly overvalued right now, but there's actually some story behind it. The PE of Equita Small Finance Bank will look really high right now. It's trading above 50 PE. However, when we take a look at the balance sheet, the story is a bit different. In last 4 quarters, the financing profit have been less than 100 crore consistently, and this is leading to drop in EPS across this year. Now, I don't know why this financing profit is negative. However, when we take a look at this company's valuation from a market cap to sales point of view, then this company is trading at the historical low right now. So maybe that's the philosophy Mr. Khanna is using to invest in this company. Now, buying a small finance bank at a time when it's in a turmoil and financing profit have been consistently low and retail investors are losing confidence, I think this is a good investment. I'll rank this investment as A. This business might not have an explosive growth, a consistent growth, because banking sector is a really competitive sector. But this is a good value buy from my point of view. Now, our next company operates in industrial minerals and specialty chemical space. Mr. Khanna is holding almost 14 crores worth of stock for this particular company right now. This company has portfolio that diversifies its investment and its export across 40 different countries. So let's take a look at fundamental analysis of the company and let's see how we will rank this investment. So this company has a special focus on micronized minerals and high performance additives that are specifically used in plastic, rubber paints, pharmaceuticals, oil and gas. And it's mainly serving domestic market with a good chunk of exposure to international market. They have export orders from now, this company has a specialty in building micronized minerals and high performance additives. They're mainly used in plastic, rubber paints, and pharmaceutical products. Apart from that, it's exporting its product to more than 40 different countries. It has a diverse product portfolio and customized solution for specific clients. If we take a look at the revenue growth, the company doubled its revenue from FY 21 to 25. It had a CAGR of almost 13%. The company is right now sitting at a profitability of 6%. They have net margin around 6 to 7%. And the main growth prospect for this company are going to come from the rising demands in plastic coatings and specialty chemicals in India. Now, if we take a look at the cash flow statement of the company is looking for capacity expansion right now. They have invested almost 77 crore in 2025 for purchasing fixed assets so that they can expand their capacity. They have a healthy free cash flow that they can use to fuel their next set of growth. So the company is growing on a consistent basis. They are able to hold up their margin across market cycle. I think that's the reason why Mr. Dolly Khanna is thinking about investing in this company. So 20 microns right now it's trading at a PE of 11 and has market cap. So 20 microns right now is trading at a PE of 11. It has total sales which is more than its current market capitalization right now. So from a valuation point of view, I think the company is fairly valued. However, the company lacks a major moat that keeps it stand out from its other competitor. The company does not have a brand presence nor a competitive advantage. That's why from a valuation point of view, I think this is a good buy and I'll rate this investment a solid B. Now, our next company is the parent company for Prakash Pipe. It's called Prakash Industries, and right now, Ms. Dolly Khanna owns almost 60 crore worth of Prakash Industries share. This company is operating in power generation space. It has thermal and hydroelectric power plant that they manage and run, and they have their operating base in MP and Uttarakhand. So let's take a look at the fundamental analysis of the company and what are its sales projection. Now, the company right now operates power plant, coal mining unit, and cement grinding unit. In terms of power plant, it has a 400 megawatt hydro power plant in Uttarakhand and 1320 megawatt thermal power plant in MP. Apart from that, it also has a 500 megawatt thermal power plant in MP. So it has total 1800 megawatt capacity in MP. It has a coal mining unit and it has a cement grinding unit located in Nigri, MP. The company follows an integrated model of coal mining where it uses coal mining to support its cement manufacturing operation. So, from a growth point of view, the company is looking to have a steady revenue growth of 8 to 10% and a profit growth of about 10 to 13% because it's going to improve its operating profit margin in the coal mining business. Now, in my opinion, this is a deep value stock. It's trading right now at a 20% discount with respect to its intrinsic value. That does not mean you have to go out and invest, but it is a stock that needs to be in our watch list. If we take a look at the fundamentals, you'll see one interesting thing. The company right now have a revenue of 5,462 crore. However, its total valuation or total market capitalization is around 2,800 crore. That means the company is trading at a discount with respect to its market capitalization almost 0.5x. I think this is a deep value stock. Mr. Khanna is going after a deep value investment over here. Now, how would I rank Prakash Industries? Prakash Industry is a company that's operating in energy space. Now, this particular company will highly rely on government policies and the resources available. They cannot have a out of the box idea to expand their sales by 20%, 30%. And right now, Mr. Khanna is going after a deep value investment at this prices. So, in my opinion, this investment deserves a solid A because the valuation matters. This next trade by Mr. Dhawan is really interesting. Right now, he owns almost 915 crore worth of Glenmark Pharmaceuticals. Now, this company is a research led company and they have a diversified portfolio across generics and OTC segments. So, let's take a look at fundamental of this company and understand why this sale makes sense. Even though Mr. Dhawan sold this particular company, however, it still remains one of his largest position in his portfolio, almost 15 to 20%. One of the interesting thing about this company is its strong R&D focus and its global reach across 70 countries in emerging markets. That means it's not highly dependent on the US market or developed market. From the growth point of view, the company is looking for US market expansion with its new products like acetylcysteine injection. I cannot pronounce it. I'm sorry. I'm moving ahead. It's also looking for market expansion in Latin America and Africa, and it's looking for an earnings growth of 15 to 18% over a period of next 3 years. That means you can expect a 12% growth in the top line and almost 18% growth in the bottom line. Now, Mr. Dhawan did not liquidate his entire position in this stock. He only cut down his position when the stock was at an all-time high and rotated that capital into other places that he thinks value exists. So, in my opinion, this entire trade deserves a solid S because he booked profit in a stock when it was trading at an all time high, rotated capital in the places which were trading fairly below valuation to maximize his portfolio growth. And this is it. Here's the ranking of all the trades made by super investors Ashish Dhawan and Dolly Khanna. On top, we have Quest Corp, Prakash Pipe, Som Industries, and Glenmark. On second, we have Equita Small Finance Bank and Prakash Industries. And on third level, we have Religare and Micron Limited. And that's all what I have for you for today's episode. I hope you enjoyed this video. Do hit the like button and subscribe to Vishal Wealth View. Bye bye. Stay safe.